Okay, so welcome to the follow-up session for the W5T stochastic trading strategy, part of the elite training course for Wave5trade. So we're going to be concentrating just on stochastic trading strategies in this session. So please, your questions be orientated towards that. So let's go through. First of all, risk disclaimer, please take your time to read this, especially if you're watching the recorded session of this. Swing trading, day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They are generally not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risks and you can lose your entire investment. No trades are recommendations or advice and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker or RIA for execution, margin and other capital requirements. Everyone watching this presentation adheres to all disclaimers on wave5trade.com. Okay, so let's go. So first, this follow-up session, we're going to be looking at those three main uses for the stochastic: the confirmation of the wave 4 pullback, the roller coaster strategy, the wave 3 strategy, and intermingled with that with some trade management ideas. But again, guys, this is not an exact science. The examples I give you today may not occur exactly again for any amount of time, but they're good examples of what to watch for, okay? Let's start with the basic one first, the confirmation of the wave 4 pullback. And this is to give you more confidence in your fifth wave trade. Now, this is ADP on the daily time frame. This triggered a while ago. And I just wanted to go through how we use a stochastic to confirm that wave 4 behavior and look for that fifth wave trade. So first of all, the wave 4 has found support in our amber zone. 80% probability is going to go on and make that new wave 5 high. Then we see the stochastic has crossed back against the main trend. So the main trend is that the wave 3 and the wave 1, that bullish trend. The stochastic with the wave 4 has pulled back against there. And we can see that the false breakout dots here in the overbought zone here denotes that strong bullish trend. We've pulled back against it on the wave 4. We now, it's like an elastic band, it wants to return to that main trend, bullish, okay? So that's all setting up very, very nicely. Secondary, we get the green arrow as part of the stochastic strategy. But our entry was a little bit earlier than that at 136.49 because that's our entry strategy for the fifth wave. But that's a good confirmation on that big candle on that daily time frame that we are going, okay? That's good confirmation that we've got a decent looking trade there. So again, it's very, very simple in that we've got the Elliott wave count sorted on our indicator sweep. We've had the wave 4 pullback. The stochastic has pulled back against those false breakouts. So that's confirmation, really, that wave 4 has behaved very well. It's against a strong bullish trend in this case, and we're good to go and look for an entry strategy for that fifth wave. Okay, the roller coaster strategy. So this is on a stock, but it's exactly the same, and we'll go through some examples on live charts on forex and futures as well. So this is the roller coaster strategy. This is a 15-minute chart on target, okay? So we're going to walk through this from left to right and make observations about entries and the stochastic signals and that sort of thing. So first of all, from the oversold zone, we get the green arrows. On the Thinkorswim version, we get both in the stochastic and on the chart here. So we are looking for a long when we get the green arrow. So we want to go above these highs of the candle with the green arrow. It doesn't happen that day. We get a gap up to around that price the following day. If you're lucky enough and you're ready to press the trigger, you've got a nice long stochastic trade there. Obviously, once we start to find a little bit of weakness in that move, we just get out and take the profit, okay? Now, not everybody would have got in that trade. Again, to spot this roller coaster type strategy, we need to see it happen a few times to get some confidence in there. So Trevor, the wave 4 is just one part, okay? Sorry, I didn't see your question. So yes, the stochastic is used to help for that fifth wave confirmation. Now this roller coaster strategy isn't trading that fifth wave. We are looking at trading opportunities as we're going from overbought to oversold to overbought to oversold. A roller coaster effect, okay? So even if you've missed this first one because you hadn't spotted it was the start of roller coaster, that's very, very difficult. There's more opportunities as you are watching this 15-minute chart progress. And again, with Momo stocks, this can happen quite a lot. So now we're at these tops. We get a red arrow, okay? We get a red arrow to come down. So after the close of that red candle here, we've got the entry. We go below there. So it's about 25 minutes later, we get that short stochastic signal because we've had the red arrows, we've gone short, and we go short into the close, and then the next day it continues down into the oversold zone. So if you look, we've gone from oversold to overbought to oversold. Now the next day, we are looking for a long, obviously. We're looking to go out of that oversold zone to go long. So we get the green arrow on this candle here where the A pivot is high. Now, with the green candle down at the bottom. So our entry has to be above that high here. It did not trigger that day. However, leaving the order on, watching the pre-market action, making sure there's no big gap ups or anything like that. The next day we open in the first 15 minutes takes us into the trade. We start to see exhaustion and we get out, okay? These are very quick trades using this roller coaster strategy, okay? Very, very quick. As soon as you start to see exhaustion, get out, take those profits. Okay, so there's the red arrow. There's the entry to go short now, okay? So we've taken our profits. It's gone weak after that big move up. We've taken profits. Now the stochastic, we're looking for it to go from overbought to oversold again. So this roller coaster motion. So we get the red arrow. Now, red arrow is on this candle here. Okay, you might not be able to see it too clearly, but it's where my cursor is. But previous to that candle, we've got some lows. So we need to make sure we go short below those lows where the green line is here. Yes, Trevor, I can do that. So we've gone short here, then we just finished this move off. We've pulled back, but we haven't taken the stop loss out because our stop loss is above this C pivot high here where we found that high. So we carry it through to the next day and then we go down and make those new lows. Okay, now exhaustion. So when we, at the end of this downward movement here, we get the red candle and then we get a piercing line green candle. So the open for that candle is slightly above the close of the previous one, the red candle, and the close is above, okay, is above the open. So that's a piercing line, okay? Now, when we get indecision after that as well, we've got to be thinking, well, this is probably going to go north again here. So we're going to make sure, and let me just draw this on here. Let's do this with the pen. So, okay, so where my red dot is here, we've got the piercing pattern. Let's just circle that if I can. We've got this piercing pattern here, okay? Now, that is a sign it's going to go up. Once we start to break those highs here, we get out at this line there. Let's go back and look at other signs of exhaustion. On this bullish move here, we've had 3 massive candles. Then we've got a piercing line the other way. So the first green candle here, now we've got a piercing line where we get the open below the close of the green and the close below the open, potentially going down. When we go below the low of that red candle there, that's when we get out, okay? So there's lots of different candlestick patterns for exhaustion, Trevor. So, you know, one of the things I would suggest, and there's loads of free stuff on the internet there, is look at candlestick patterns and learn those basic candlestick patterns. And maybe what we'll do when we've gone through all of these sessions, we'll, on one of the Wave5trade monthly webinars, I'll spend a bit of time on some basic candlestick patterns so you can help to look for exhaustion and things turning around, okay? Okay, so next. At this point here, we don't go long, okay? We don't go long. At this point here, we're still short. We've only just triggered, okay? We've only just triggered coming through this red. We've got to ignore this green candle, and that is confirmed by this lower resistance level and another red candle actually crossed over below the oversold zone, okay? So that gives you confidence just before the close of the session that the bearish move is going to continue down, and it did. Okay, yeah, sorry, Jerry, it's just because it's this webinar here, but I will answer them as they come through. So the next on the roller coaster, so we've come back in the oversold zone here. We are looking for a potential long. We get the green arrow, okay, coming out. We've flatlined here. We want to make sure we are above this one pivot here from the start of the day, from the low that we've come down. We've had this one pivot here, and then we've come back down. We've had this higher support level, okay, higher support level. So we're going to go long at this point here. So the next day we gap up, we gap up, comes back down again and takes us through. Even if we missed that, there is opportunities just to get in right at the beginning of the session. And sometimes on a 15 or a 30-minute time frame on this roller coaster type strategy, you've got to be ready at the beginning of those sessions, especially on stocks there. But again, that was another entry. So as you can see, we're building this picture all the time. We may not get every single trade, but we're going from overbought to oversold to overbought to oversold. That is the roller coaster strategy. Now, once we move higher on this, we get a red arrow, but we're in a wave 4 pullback zone here. We're not going to trade the fifth wave, but we're not going to look to take the short either, because we're in these fib zones are very, very strong. So we're not going to go short here. And as it happens, it did turn up and make that higher high into the fifth wave. There was no fifth wave trade there because, as you can see here, the 535 didn't pull back more, you know, deep enough. The stochastic didn't pull back deep enough. It was just a false wave 4. Okay, but these stochastic levels are very, very strong. No, I don't use the color of the stochastic, the oscillator, when deciding on these trades. We will discuss, however, the crowning and things like that on the oscillator on another example there. So let's just carry on through with this. So now we get a second red arrow coming out of here. Okay, we get the red arrow here. So the red arrow is actually on this green candle here, if you can see where the laser pointer is. Okay, so that red arrow occurs when the candle closes. So we got to be going short below the low of that candle. So that's our entry strategy. Okay, stop loss is going to be above this high pivot here. Okay, so then it triggers and we go short. Okay, now we start to get in the oversold zone. We start to run out of juice, exhaustion, guys. Okay, we get this low, it pulls back up, and then we're steady, 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 and the price action is really getting small. Lots of doji indecision candles. It's not pushing down. Get out. Okay, then we want to come out the oversold to go to the overbought zone. It's a roller coaster stochastic trading strategy. We get a green arrow. Okay, we get a green arrow on this green candle here. We want to make sure we're above the high of that candle to go long. So on the next candle, it does trigger. Okay, it might be in a slight higher entry, but that's the entry. Okay, stop loss really nice and tight below these lows here, and then it goes higher. Talk about a bit of trade management here now. So when we get that first impulse move up and it comes back down and tests the original entry, we get this slightly wick pivot low here where this red is. Once we start to move back up and through this high point here where the laser pointer is, that first initial move into this trade, we place the trailing stop here where the red dotted line is. Now obviously this previous resistance level is going to cause resistance, and it did. Don't expect anything different unless it piles through. So the next leg up, we move up, we find that resistance, which is natural because it was a previous resistance level, and then we pull back down. We get exhaustion at the bottom of this move with that indecision doji right here. Okay, I can't zoom in on this because it's the slide and not the actual chart, but we get that higher support level. So when it does move back up above this resistance level, we adjust the trailing stop to here. So we're just using those higher support levels. Once they've confirmed and gone through this resistance and this resistance here, we're adjusting the trailing stop. Then the next day, we pile up and make that new wave 3 high. Okay. Now, looking back, when we get those big moves up at the beginning of the day, just recently on this stochastic trading strategy, we run out of juice and we pull back a little bit. Okay, it's happened more often than not. So if we get that there, we've got to learn from our previous strategies, previous trades, identifying this roller coaster strategy here, that this is likely to pull back. Okay, so once we make that big move up, the next candle is a big indecision doji. You need to be getting out. Okay, big wicks. Okay, on that candle means lots of indecision. You don't know it's going to go up, go down. You're in a big profit making position now. Get out. Now we've formed the wave 3. Okay, Now, now this wave 3 has formed, we can see on the bottom here we've got divergence on the stochastic. Okay, can we see this? Plus also now we're talking about this lower, this pullback on the 535 and then the move higher. Okay, denoting this is a really strong wave 3. This also at this point, where we adjusted that trading stop to here, this is where we got that higher crossover on the stochastic. I'm going to talk about more of those in the next example. But when you can use these as a really sort of confidence tool when you're managing this trade, because again, we've found that first pullback, we've put the trading stop in. It's gone and found resistance at previous resistance level. That's natural. It's pulled back. But it's crossed over and gone higher, and you know, we've adjusted the trading stop again, and that crossover on the stochastic was higher. This gives us confidence that we're really getting strong bullish now. Then we get that big move the next day, forms a wave 3 on our indicator sweep. We get some indecision on the next candle. Let's get out. Let's see what happens. Let's see if this is the catalyst for that wave 4 pullback, which it was. Okay. Now, we don't trade the short on the wave 4 pullback because we're coming into our probability support levels here in the green, the amber, and red. So it's likely to find support somewhere. And guess what? It found support on the wave 4 at the previous resistance levels. This is no fluke. This happens all the time. So now we've gone from trading 3 or 4 trades on this roller coaster strategy to building some more bullish momentum. Now we've had a wave 4 pullback. We're going to use that stochastic to confirm that wave 4, which it did. We've got the 535 crossing over here, crowning between 90 and 140%. We've got the stochastic crossing over in the oversold zone. We've got the green arrow, which appears just here. And we've got our entry strategy coming out, the 6-4 moving average high. Boom, we get the 5th wave move. Now, it wasn't brilliant. It didn't hit the target. We got a piercing line here. It wasn't an excellent 5th wave move, but we got along. As soon as you see that exhaustion, you got to be thinking, I'm going to get out of here. Okay? So as you can see, you can start building a picture. Again, depending on how active a trader you are, what sort of time frames. This will work on a daily time frame. Okay, so it doesn't take long to look at this chart, a chart every single day, even if you've got 30 strong Momo stocks on there. But what you're looking for is that going from overbought to oversold to overbought to oversold. Usually you'll see that in a range. So if we're on the 15-minute chart here, this is bullish bias, but it's still probably in a range on the daily time frame at the moment. So then, you know, when we see a stock like that, that's in a range on the daily time frame, we go down to 60, 30, 15 and see how it's performing on that stochastic. If we can see the formation of that roller coaster type strategy going from overbought to oversold to overbought, we then keep a closer eye on it and we look for our entries there. Okay. Any questions on the roller coaster strategy? We will do some more examples. Remember, on the webinar chat, click all panelists and attendees so that people can see it. So any more questions on the, again, this is being recorded, guys. It will be part of the elite training course. It will be the second video underneath the main lesson. So you can go over it again. So this is quite an involved strategy. It takes practice. You'll probably have to go back through the video a few times, but that's fine. That's what the course is for. Okay, let's move on. So wave 3 strategy now. This is a little bit easier. This is MasterCard on the 15-minute again, but we will do some other types of instruments. So first of all, we get a strong bullish move up on a wave 1. Okay, you can see that denoted by the false breakout dots here. So we're on this wave 1, we got a really strong move up. Okay, and now on the wave 2, we are pulling back against that strong false breakout bar there. So that's basically saying we're pulling back against a strong trend on this wave 2. And in theory, if it's a proper wave 2, it doesn't go beyond the origin of wave 1. That's one of our basic rules. So we've got the crossover in the oversold zone. We've got a wave 2 formed. Then we get the green arrow. Okay, so this is now on the NinjaTrader version. We've done an example on the Think or Swim. So when we get the green arrow here, we don't press the go button straight away. We know it's a strong bullish trend. The wave 2 has met our rules, but we want to trade the third wave. To make sure we're going to do that, we want to make sure our entry is above the wave 1 pivot, remember. We've got the strong bullish momentum. We've pulled back on the wave 2. So on the stochastic, we've got the false breakout bars. We've pulled back against it. It wants to return there. But only when we enter above there are we confident it's going to go, which it did. As you can see here, this was the trigger, and we are really strong bullish on a wave 3, which it should be, okay? It should be strong because it's the strongest impulse move on an Elliott wave trend. As you can see now, we get the false breakout dots start to form again, showing that really strong bullish momentum. So that's when you use, when it's returned back to that bullish momentum, you see this big gap between the 6-4 moving averages. That's when you use the 6-4 moving average low as your trailing stop position. So each candle that goes by, you adjust the trailing stop in line with the 6-4 moving average low, and eventually it takes it out. Okay, so that's just another type of example of trailing stop. On the previous examples on the roller coaster strategy, we were looking at pivot points and higher support levels. With this, when we've got a really strong impulse move like this on this wave 3, and we've got those false dots, we can be a little bit more conservative here and just allow that to run. If it runs out of juice, it'll come back to the 6-4 moving average low, and that's when we take out. So this is a potential short on the wave 3 strategy, and now we're going to talk about a little bit of divergence here on the stochastic to help us understand how to enter this type of stochastic trade stroke wave 3 trade. Okay, and we're talking about more sort of divergence on the stochastic there. Okay, so that's, we'll cover that in a minute, Robert. I just want to go through the rest of these examples. So first of all, this is a futures, 6E, so it's euro, okay. Remember, when we're trading futures, we put in the yesterday's close, today's open, which is in yellow, and yesterday's close in blue. So these are strong pivot points that we need to take notice of when we're going to make any decisions, okay? So if we're going to go short in this, we're going to make sure it's below the open, okay? At the point when we start, we wake up around here in the morning, okay? This is the overnight session here. We just keep an eye on what's been happening, okay? So what has been happening? We got a red arrow there. We came down, we didn't even touch yesterday's close. So what happened on the next red arrow? Okay, we got a slightly lower crossover. We could say we're sort of bearish bias, but again, when we came down, we came a bit lower, but we didn't go through yesterday's close. Okay. What happened on the next red arrow? We got a slightly lower cross on the stochastic again. So that's given us that bearish bias feeling, but we didn't go through the close of yesterday. Now, get up in the morning and we can see it's actually had a go at coming through yesterday's close. And then as we start towards the beginning of the US session, we get another red arrow, okay, with another lower cross on the stochastic. This is really building some bearish bias here, okay, but we didn't cross through the open, okay. So again, we still not got that entry, but it's getting closer. We need to put an entry on here. We need to put an entry on just below this open. We've got these stochastics which are crossing over lower, okay. We don't seem to want to go higher. We've got this bearish bias confirmed by these lower stochastic crosses, and we are getting these lower support levels. The next red arrow, we actually get the entry, okay, here. Red arrow here, lower stochastic cross, okay. There's getting this divergence on the stochastic crosses here. Stop loss would be above this high previous to the red candle, and obviously entry, we'd already put that on entry just below here. So now it does pull back, okay. Even if you didn't get this entry and it pulls back on this wave 2, it's a lower resistance level. When it goes down again and goes through that original entry, if you're not already in, you get in, okay? Because again, we're getting the lower cross on the stochastic. We've got this divergence going. And as you can see, it went on through the pivot level, and that was the short. Obviously, because it's strong bearish momentum there, we use the 6-4 moving average high for the trailing stop position there. So again, just to reaffirm that bearish bias, right from the overnight session here, we can see these stochastic crossovers, we've got divergence there, we are getting lower, okay? So when we wake up in the morning, around about this time, we can see that is happening. We got to get an entry ready. The entry's got to be below the close, or a pivot point, or wherever we've got some major support, okay? In this case, it is the the open of the day. We get this first entry. Even if we miss that first entry, and it comes back and it makes a lower resistance level, we've got to go back in just below this open pivot point here. And because the bias is bearish, we can confirm that with the wave 2 meeting the criteria there, but also this stochastic divergence is massive, okay? So then we can see it just went on to make that. So now to the charts, guys, to the charts. Okay, so I'm just going to go through some examples I've pre-done. Well, not pre-done, I just put the charts up, and then we'll look at the SPY for Robert on the hourly. Okay, let me just pause this a second. Okay, after a little break, we're going to look at US dollar, Japanese yen. Okay. And we're going to go through it from July the 9th, and we're going to look at potential trades from here. Now, if I just go left a little bit, I'm going to draw something in here. Okay, so this doesn't really matter whether it's forex, futures, stocks. It doesn't really matter. What we've got here is this double bottom, and then we have got a higher support level here. Okay, now, when that happens, we've got a bullish bias, okay? We've got a double bottom, we've gone higher, we've pulled back, and we've got this support level down here. We've got a potential now, because we've got the green arrow, to go long, okay? So let's put that potential long entry in here. We're going to go above these highs, okay? So if we get new highs, we could say the momentum is pulling, and it did, okay? We actually then traded the first wave, okay? Look what happened during the first wave. We got the false breakout dots. Really strong move, okay? So let me just draw in a arrow line here. Just want to confirm from that double bottom, we got a higher support, okay? Then we got the green arrow. We don't go straight away, we go above here, okay? Let's zoom in. We get a wave 1 posted. We don't know if that's the wave 1 at that time, but we do start to see some signs of exhaustion here, okay? And just tips the 6-4 moving average low there, okay? So if we're using the 6-4 moving average low as our trailing stop position, which is a standard, okay? Okay, Jerry, thank you. We take the profit. We're not trading the short, remember, because now we've had the wave 1, we're looking for a wave 2, which actually, when you look at this, finds support at the previous resistance level that we entered up for the long, which is good. Also, take note, the stochastic, this is a stochastic trading strategy. The stochastic has pulled back against the false breakout dots. It's crossed over in the oversold zone for the wave 2. We are now looking for that third wave move. Starts to move out, we get the green arrow here, okay? We gotta look for a long. We don't go long until when? Anybody? So with stochastic wave 3 trading strategy, not just through the 6-4 moving average high, Jerry, what else if we're trading the wave 3? Anybody? We've got to go long above the wave 1 pivot, okay? We don't go too early. If we go too early, it could come back on a further pullback on the wave 2. To confirm the wave 3 and the bullish momentum, we've pulled back against the stochastic, we've crossed over, we've got the green arrow, we do not press the button until we go through that wave 1 pivot, okay? Then you can see how that momentum really gathers on that wave 3, okay? False breakout dots start to occur. Strong wave 3. How do we manage it? We manage, you know, a pip or two below the 6-4 moving average low. We finally take it out up here. That was a great third wave move, okay? Great trade. So even if we miss this first one, we've traded the third wave, okay? If we got 2, we've had some great trades here. We are not going to go short at this point. Remember, when we've just traded the wave 3, we don't trade this wave 4 pullback. Was there a 5th wave trade here? Potentially, yes, actually. Okay, so let's just pull this down. Okay, so we've had this first wave 4 pullback. Stochastics crossed over in the oversold zone. Let's just measure that 535. I know it's okay, but I'm going to measure it anyway, just to remind you guys. So fib extensions, highest point on the wave 3 to the 0 point, back to the highest point on the wave 3. Okay. I've got my template already sorted out for my oscillator pullback. Okay, as you can see there, between 90 and 140%. We've hit the green line. Where do we go? We go pretty aggressive outside of the 6-4 moving average high there. Okay. It didn't come, the stop loss is just below the wave 4, didn't come back down, test it, and eventually went on and hit the 5th wave target. So really, really good trade. So in that whole bullish move on US dollar, Japanese yen, beginning sort of 9th of July to the 17th of July, there were 3 good trades. Okay, so if you're just trading forex and 3 major currency pairs, as long as you've got these multiple time frames on, you will see these trades occur. Okay, does that make sense? We've gone through, we traded the initial stochastic, a 3rd wave, we've allowed the 4th wave to pull back, that momentum's still with us, and we get the 5th wave move. Okay, so that's one example. Let's go to YM now. Now I've done this on a tick chart, 300 tick chart, okay, just to show you how this works, exactly the same on a tick chart for futures. Okay, so this is go left, and I want to draw this line again. So we've got a major resistance zone here, okay. We're not breaking that resistance zone, we're flat, okay, and then we start to move away. So we get this first initial red arrow here, okay, but we've got to look left and we've got to think, wow, these are causing some major support here. We've got to make sure we go below that. And some of you might think, actually, I'm not going to go short here. I'm just going to see how it goes and look for a pullback. That's absolutely fine. So if you don't get in this short at this point here and take this little move, absolutely fine and quite sensible in some cases. But look what happens. We get a wave 2 pullback against the false breakout dots on the stochastic. The wave 2 pullback pulls back, crosses over in the overbought zone. It wants to return to the main bearish trend, and that's what it does. Where's our entry for this wave 3rd wave trade? Below the wave 1 pivot. Okay, we want to make sure that that momentum is with us. So there we go again. Okay, we go down, down, down. Okay, now it just tips the 6-4 moving average high here. Fine. If you're being very aggressive with this move, you're out of that trade there. Okay, if you are using the pivot level, you'll move your trading stop to here. We go down, we come back up, we come down past that pivot level, we're adjusting the trading stop here. Whoops. I won't be able to grab that in a minute. Okay, and then we move back and we just keep going down and down and down until we hit the wave 3, and then we're just pulling back too deep on the wave 4, so we get out. So there's lots of opportunity to manage that using pivot points, using the 6-4 moving average high, but eventually we get a really deep pullback. Now, this is a great example, guys. When we get this wave 4 pullback and we get the yellow dots on top here in the overbought zone, we're strong bullish. We are not looking for a 5th wave move down, okay? We've had a great 3rd wave move down, and now we're potentially looking to fail on that wave 4 and go bullish. We're not interested. We've had our trades, okay? And then finally, FDAX, another futures contract here, this time using 5 range. And again, let's go through how this sets up, where we get these highs here. Okay, so I isolated at these highs here, and we got the double top, and this happens a lot, okay? So let's just zoom in a little bit. We get this first red arrow here. Now, there's lots of support coming up to there, and we've got the yellow dots on the top here. So we're not going to go short straight away, okay? We allow that first move to happen. During that first move, we get some yellow dots on the bottom. which denotes a strong bearish trend. So this is a slightly different setup in that we don't want to go short straight away from this double top on the first red arrow because we're going against this false breakout dots on the top, which denotes strong bullish trend. We want to make sure it breaks that, and it does on this first impulse leg. Okay, we get those yellow dots denoting strong bearish momentum. Then we get a wave 1 printed. The wave 2 pulls back, crosses over in the overbought zone. We've got a wave 3, potential wave 3 on our hands here. And where do we go short on a potential wave 3 stochastic trade? Anybody? Anybody? Yep, we go below the wave 1 pivot here. That's our short entry, and as you can see there, if we're using pivots, we just keep trading and all the way down here. If we're using the 6-4 moving average high, we'd probably get taken out a little bit too soon. So as you can see on these shorter time frame futures contracts, maybe the pivot strategy is probably a better type of strategy, unless you get this really big move down on the wave 3 here. If you get a massive move down and you get divergence away from the 6-4 moving averages high, that's when you got to think, okay, we've got increasing divergence here. If it starts to pull back against there, I'm going to get out the 6-4 moving average high. During these sorts of sessions, we are not really getting that big long move. So we're going to use the pivot type strategy to increase our profit on the trailing stocks. But once we get a long sustained move backed up by these false breakout dots on the bottom here, we've then got to think, right, I'm moving from my pivot point trailing stop strategy, and I'm going to be quite tight now on this 6-4 moving average high. That's when to recognize it, when you get that big move down, backed up by the false breakout dots, and you're getting divergence away from the 6-4 moving averages high. Okay, then we get a wave 4 pullback. Okay, and again, wave 4 pullback fails for me because we got these false breakout dots there. Okay, right, so SPY. Somebody asked me about SPY on the 60-minute. So let's just duplicate this in a new tab. Put SPY in there. I think that's right in Ninja. We'll see. Okay, data's not fantastic there. Let's just isolate. Data's not brilliant on the on Ninja just here. See these gaps? That's not quite right, I don't think, is it? In either case, we're looking at stochastic trades here, so let's have a look at this. Okay, we are quite bullish bias on the 60-minute through July. Okay, we've had quite a deep pullback this time. We've got no false breakouts to help us here. All we've got is this pullback against the main trend. Okay, which happened. Yeah, I'll have a look on TOS in a minute. So, which happened Thursday, Friday, and today. And we do seem to have found a low. Again, we have this indecision doji here, this hammerhead, which also forming a bullish harami. But we've got a 1-2 here, so we've got to be careful on entry here. We've not got an entry until we get that green arrow posted, guys, okay? So this is 60-minute SPY, yeah? It's probably slightly delayed because this is a Ninja Trader. So let's just go to TOS. But again, we're not looking for a long until we're outside the 6-4 moving average high, at least, and have the green arrow. Okay. So let's just pause that, and we'll bring TOS over. Okay, so with ES, stroke SPY, because it follows very, very much a similar sort of suit. So this is the 5-minute chart right now as we're doing this recording. During the session, we've gone from the highs and we've had the wave 1, okay? During that wave 1, we've had these false breakout bars form at the bottom, denoting strong bearish momentum. Now, if we are going to trade a third wave short, where is our entry for this short, guys? Exactly. Okay. We could trade this little short down to this low, but we've got a lot of things in our against us at the moment. That's quite a sharp pullback, okay, and it could continue higher. We don't want to be entering this point here. Now, if this stochastic then returns back down here and we break this wave 1 pivot, we'll be looking for a short on ES stroke SPY, okay? Only if that happens. We don't want to be trading between here and here. We've got a pivot point that will act as support, okay? Now, this could fail as well. It might hit this pivot level here, and all of a sudden, we've gone from a low to a 1, to a 2, to a potential 3 bullish. So we don't want to be too early here. If we're trading that third wave, we've got to be below this wave 1. We've got to be patient. With this particular strategy, we have to be very, very patient, okay? We don't want to go too early. If that comes down, fine. We're going to be probably bearish for 2 or 3 days into this week. Now, if it stays up and we move higher, brilliant. We're probably going to, this potential bearish move that we've had for the first 1, 2, 3, 4 hours of the session is failed and we're coming up. But at this moment in time, also, yeah, this is the session so far from these highs. A good thing to do, and it's obviously something that's I use a lot on these retracements, okay? So I'm going to go from the high of the session right up here, and I'm going to go to the low of the session. And I want to see where these points are for today's session, really, because that's important to me, especially when we are looking at potential third waves and so on and so forth. So when we are looking at this whole move down, a good thing for me, potentially going higher now, is that usually when you get a big strong move during a session and it pulls back, it does find resistance, which it did do for about 20 minutes here, and then turns back down. Now, in this case, it's gone through there and we found resistance at the 50 fib. Now, we're getting close now for this bullish momentum to start. So if this comes back down and finds a bit of support down at this 382 and then goes on through and makes a new high, we're not going to be going south anymore. Okay, so when you get a strong move during a session, the pullback against there, the sweet spot, if you like, is that 0.382. Now, it did find resistance there, but there was way too much bullish momentum and buyers coming in to take that to turn back down again, okay? So this is the ideal spot for this wave 2 to have happened, and then we come down and we take the wave 3 below this wave 1. It didn't happen. We're now at the 50 fib and potentially going higher. So that will then, that will then fail. So that's just a little trick. If we get, and it doesn't matter if it's a big bullish move in the first half of the session, a pullback against that bullish move, that 382 is really the sweet spot. If we go further than that, we've got to be a little bit careful if we're going to look for trades. Okay, guys, so we've been going now for a little over an hour. This was the second and sort of extra session, if you like, for those stochastic trading strategies for the elite training course. Are there any specific questions on what we've covered today? Any questions? Not at this moment in time, Jerry. No, we are, for the stochastic trading strategy, we are looking, if we're trading a 60-minute and we see that nice roller coaster strategy, we're just going to use that stochastic for that time frame. Okay, we're not going to use multiple time frame stochastics within this strategy. So if we're trading off a 5-minute for futures, we're just going to stick to that one for that stochastic type of strategy. Especially on the roller coaster, we're going from overbought to oversold. We're just going to keep it that simple. Okay. And just while you're there, guys, this is a precursor for a new add-on that we are developing for day trading futures. You can see at the bottom here these lines of dots. Now these are part of a multiple time frame strategy that helps us depict the momentum and the direction of the main trend, which helps us with these stochastic and fifth wave trades on futures trading. Also, this cloud you see here as well is part of that strategy, but this won't be released until October, until we finish trialing it, but that will be an add-on for an extra cost to your indicator suite. But it's very, very cool, and it's working very well at the moment on futures for day trading. Okay, so that's it for today, guys. As long as there's no more questions, this recording will go up tomorrow underneath the main stochastics trading lesson video, and it'll be there forever infinitum. Yeah, so for example, if we were on this here, the trend is strong bearish, Trevor. If we get the false breakout dots appear on the top, we can say that bearish momentum is slowing down and potentially we're turning to bullish. Okay, thank you, Robert. So at the moment we are strong bearish, but if this turns up before the oversold zone here and goes back up into there, we could be turning bullish, but we don't know at that point. Okay, all we know at this point is we're strong bearish, we're looking for shorts. The only short that we've got right here is if for the third wave coming below this one pivot. Now, if this continues to go higher, which just had a massive move up there now and crossed, we, in theory, in the next 15-20 minutes or so, if this keeps going up, we could get the false breakout, the yellow dots at the top, which means that bearish momentum has subsided. So Trevor, very, very briefly, I'm not going to explain too much because we're doing some more trials with this. So this top line of dots here denotes the time frame that you are on, okay? And that's gone to green, so potentially bullish. The next is the 15-minute, okay? The next one down is the 60, the daily, the 3 daily, and the weekly, okay? Now, there's a whole strategy with this, which helps you look and identify really strong potential trades, okay? And then we've got this cloud as well, which does act support and resistance, and that will be explained when we come to that. But basically, at this moment in time, this short here was good because we were 5, 15, and 60 all red. Now you can see we're potentially changing. In blue is in the cloud, green is for up, and obviously red is for down, for bears. So at this moment in time, we're in that flux, okay? And then we use this cloud as well on this particular time frame to help look for the support and resistance zones. But again, this isn't being launched until October. Just a quick preview, but really, really helpful and a good addition to day trading futures. Okay, so that's it for today, guys. I'm just going to stop the recording.